Yo, what's going on, boys? Turner here with another video, and today we're going to be going over a weekly recap, what trades I took this week, everything that popped up. There was two great positions this week, two really good positions this week. The one I unfortunately missed. It was really early in my session. I start trading at 4:30 a.m. I trade London session here, and had a really late night the night before. Didn't wake up till just a little bit later, and unfortunately missed a really good textbook setup. But that's just part of the journey. It is what it is. And the second position I did capitalize on, and I was able to hit that trade for 5%. And I hit that trade. I passed some accounts with that as well. So super grateful. But I'm gonna pretty much show you guys everything that popped up. If you've never watched me before, I'll kind of show you guys my entry model. I'll show you guys the full thing of my entry model, and stuff like that. But yeah, let's hop in the charts. I'll show you guys, everything we took and what all we missed this week. All right, boys, here we are on my journal. Okay, so again, been consistent. This month we had one trade that I liked. It's been very dry, right? It's been very dry because the whole Iran war, right? We only had one trade. That was on AUD/JPY. Great setup, and I lost there. And nothing else. And then Tuesday we had an absolute banger of a setup. I told you guys this one I unfortunately missed, but a lot of guys ate with this, so super happy. Same people trading the same entry model as me, obviously. That's who ate on this trade, and that was a nice 4% trade right there as well. It hit a 1 to 4, it hit a 1 to 3, all of that. And then the day after, I lied, actually, it was the same day, except that it hit the... Oh, wait, no, I lied to you guys. I'm sorry. Both trades were on Wednesday. I'm sorry. Both trades were on Wednesday. NASDAQ trade was on Wednesday. We'll go over it. And then GBP/JPY was on Wednesday as well. And that was that trade. So, yeah. And obviously, I'll show you guys, trades journaled, obviously, as well here. Go to my trades. Yeah, this was this trade. I have a screenshot of it as well, which I'm going to show you guys, obviously, on the chart. But yeah, that's literally it right there. So let's go over the NASDAQ setup first that I traded and I missed. But I'm going to also show you guys the my entry model real quick, because I know I have new people that watch me, and you're probably curious, like, oh, okay, how do you trade, right? So my trading model is very simple, okay? It's very simple. We just literally, it's just patience, and you wait for the same thing to play out. So you want to find trending markets like this, okay? Obviously, everyone knows, right? We're putting in higher highs and higher lows. But it's at some point in time when price is trending bullish like this, we always seek opposite side liquidity, right? So when we have opposite side liquidity like this, price will a lot of times algorithmically run to chase that opposite side liquidity, take out that liquidity to, then fuel this next continuous move, right? So what we look for is we look for trending markets, and we look for a nice liquidity sweep like that. And we want to see it tap into a demand zone. And if we get that valid reaction, I don't want to see like a candle close inside or anything like that. I don't want to see it disrespect it and blow through that zone or anything like that. I want to see, nice wicks come into that zone, but push back out. There's buying pressure there. I don't want to see any candle closes in there for bearish momentum, obviously in a bullish example. And if we get that bullish close, I'm looking to take that trade to then continue the overall trend, or maybe target a specific level in this structure right here if I'm unsure of the overall trend, right? So that's kind of my my entry model, right? So that's just it drawn out really simple. And I'm going to show you guys here on NASDAQ the setup that I unfortunately missed here. So this was on Wednesday. It was this setup right here, okay? And this is an example of it. We're overall trending bullish on pretty much all the time frames, okay? And we have a beautiful demand zone, right? And price comes down, creates a low, and we create another higher high, right? So price comes up and takes out that high. After we take out that high, that's just one of my rules within the entry model that I want to see. I want to see price come up and take that high, and when we do that, that's valid, right? So price comes back down, and we take that liquidity really nicely. Lots of volume, right? So price comes down, and again, here's that demand zone right here, drawn out from this last bearish candle down to this bullish wick right here, and we didn't see a candle close, right? I told you guys I don't want to see a candle close. That makes my entry model invalid if candle closes bearish inside this zone. We didn't. We had two wicks respecting it, and this entry candle gave us a great bullish reaction, right? So we got that great bullish reaction. One of my entry models is break of candle. So what that means is if we get a lot of bullish price action like this, and a lot of volume, when we come up and take this last bearish candle wick, the first candle that tapped into the zone, as soon as we go and take that high of that candle, no matter if it's the body or it's the wick, we'll enter there. And for this strategy is this entry model, it's one in a few where you can actually put your stop loss right under that candle that tapped your demand zone. I know a lot of traders will have their stop losses, under demand zones or under support level, this and that. This is one of those entry models that you can realistically put your stop loss right under that entry candle, and it makes it very nice because you can get really high risk to rewards. And again, if price comes down and disrespects then that invalidates our whole trading or this whole point of this trade right here. So this is a great spot for your stop loss, because again, if we took this liquidity and started continuing down, there's no reason just for it to have a bigger stop loss to then get stopped out for the same reason down here, because we're going to be targeting opposite side liquidity, right? Or there might be an imbalance within the market that we're going to be targeting. So you could essentially be drawing your stop loss forever and ever, trying to find the safe spot. But realistically, the safest spot is just after price come down and manipulatively takes your level of liquidity, your safe spot's right under that candle wick, right where we react from a demand zone. So this trade specifically, you can target a 1 to 3, which would have got smacked right there. Or if you wanted to be a little bit more patient, you could have held for a 1 to 4. I've backtested NQ on, I think, 4 years now, and I've found that a lot of these pairs, 1 to 4s, make the most P&L compared to something like the 1 to 2s. The win rate is obviously a little bit less, but it makes the most P&L by a massive amount. So again, if you're just that patient trader that you want to hold through that, because long term it realistically is a lot more profitable, especially when NQ's expanding like it is. We're not consolidating or anything like that, and we're actually trending bullish, and you're taking trades in trend. Then it's very important to do it like this. And I have all the data for this on NQ right here. All of these statistics. This is NQ in 24 and 25. I have obviously the other years as well, but this is just 2024 and 2025 that I tracked all this. And you can come over here and simulate it, see how it plays out, all that stuff. So that's pretty much how I know that performs better than 1 to 2s. So that's that trade, and that's just an absolute banger of a setup. This happened at 4:40. Again, my session's usually like 4:30. I was running late a little bit. Woke up kind of around this point in time, and obviously it was just too late for me. Trade already played out. But that is a great trade. That is an example of how good and simple this entry model is. This is an entry model, right? This is the entry model. This entry model has to be used very specifically. Okay, it can't be used, if higher time frames against it. It can't be used, maybe if there's lots of liquidity for us to come take down here, then there's no reason for price to only take this level of liquidity and run up. If there's a lot of liquidity, let's say resting under here, or I use a bunch of concepts that is not exactly on YouTube, but I use a lot of context and concepts behind my trades to make sure this entry model is actually valid and fits in. So there's that, right? And that was the on the 5-minute time frame. Now I trade the 5-minute time frame and I also trade the 30-minute time frame. Okay, so if we come to the 30-minute time frame, I'll show you guys the second trade I took. This is the first trade that I initially missed. Okay, I missed this trade, but this is just an example of absolute textbook setup right here. Great setup on NASDAQ right there. So if we come to GBP JPY, go to 30-minute time frame. So we're going to check out this setup right here. Okay, so this setup, let me make it a little bit clearer for you guys. So this setup, we draw our demand zone. Now I use something called accuracy zones. Okay, so for example, guys, this demand zone right here, this is our demand zone under all of this liquidity. Okay, this right here, if this candle wick is higher than the next bullish candle, then we draw an accuracy zone. What that means is we draw an accuracy zone, so it's just from that that body of that candle instead of the whole entire wick. because when we have a wick higher than this next previous candle, where did the actual buying pressure come in? Well, it came in from down here, not the whole way up here. So it makes no sense to draw a demand zone the whole way up here, and essentially you can get faked out a lot of times because it'll just tap into that quote unquote demand zone. But if it has a really high upper wick, if anything, there was selling pressure there, not buying pressure. Buying pressure came in from this bullish candle way down here, and it drove price up. So this is the real demand zone. So that's kind of what I draw. It's called accuracy zones on that demand, around that bearish candle right there, right before that demand push. So this was that. Now again, this is on a 30-minute time frame. These things play out a little bit slower. So what did I see? Well, I saw exactly what I showed you guys, that entry model. I had to make sure market context was there. Okay, I had to make sure no resting liquidity was under here. I used, again, a couple concepts I don't put on YouTube to make sure of that. I make sure there's no reasons for price to chase lower, and I make sure that obviously we're in trend. Everything looking good. The third piece to this, I make sure, which is probably the most important, trading on 30-minute time frames, you want to make sure your fundamentals are in line, right? You have to make sure your fundamentals are in line. If you don't, then the 30-minute time frame, it's not really gonna play out, right? So we can come here to GBP JPY. Now this is updated in real time because again, the software is constantly updating in real time, right? It's not lagging. At this point in time when I was taking this trade, GBP JPY was +4, right? And when you click on it, it'll give it a second to load because it's constantly updating. It's going to give you an AI breakdown of, again, why it's bullish. But long story short, I'll come back to this. It was bullish because we had a lot of inflation. GBP inflation was at like 3.3%. A lot of it was driven by the news, right? And fundamentally, we were there. On the 30-minute time frame, you have to make sure your fundamentals are there. Okay, you have to make sure your fundamentals are there, right? And yeah, it's gonna tell you about everything here, right? It's literally gonna tell you about everything that's going on. And why it's bullish, why it's bearish, why it's neutral at this point in time, right? A lot of talks about the 3.3% inflation, this and that. And I also came to the DMX, which is Dumb Money Index, and this is retail investors. Now, we know retail investors 99% of the time are wrong, right? So I come here and I realize, okay, retail investors are, at this point in time, I think we're actually 70% bearish on GBP JPY. And I was like, cool, retail investors are always wrong. I have to place opposite of them. Why am I placing opposite of them? Well, because main table right here on TradeSafe literally shows you that it's bullish because of GBP inflation. So cool, I'm going to take that into account. I have to pair that fundamentals with the actual technicals. So that's what I'm talking about when I say use your entry model, but also pair it with fundamentals, right? On the 30-minute time frame. That 5-minute time frame is going to be mostly all technicals, okay? But on 30-minute time frame, things play out a lot longer, right? A 5-minute time frame, you can have a trade play out in 20 minutes. But on the 30-minute time frame, this trade took 6 hours. A lot of stuff can happen in 6 hours. 6 hours, prices moved by actual fundamentals of these two currencies, which you can come here and go onto each and every single currency table, okay, and read about them. You can come on the bank reports and read the inflation. You can see the risk sentiment, all of this stuff, right? So pair all that with your actual technicals, right? And draw out your liquidity level right here, right? All of this is liquidity, all of it, right? It's not just this is the only level. All of this is liquidity, realistically. All of this is all liquidity, okay? All of this is consolidatory liquidity, price generating sideways, right? Price generating, and all of this is liquidity. It's buy side liquidity under all of these lows, right? So price gets overextended and we retrace. What did I tell you guys when I was showing you guys the entry model? I showed you guys, well, price has to take opposite side liquidity to then continue that bullish movement up, right? So price comes down, we take opposite side liquidity. Price, people will see this and think, oh, we're bearish, we're dumping hard. That's not the case at all. Price is algorithmically a lot of times designed to go and then take opposite side liquidity to fill orders to continue that bullish movement up. Those technicals alone aren't going to win you every single trade on the 30-minute time frame. You have to make sure the fundamentals are there. This is crucial. You have to make sure the fundamentals are there. Even market trend alone, right? It can look bullish, but if fundamentals really start to change, and you can watch them live over here, if fundamentals really start to change, then you should be more weary and cautious of that trade. But I saw the technicals come in line, price algorithmically sweeping liquidity, right? Sweeping all of these lows, giving me my entry model right off this demand zone. We get a bullish candle close, right? And at this point in time, my technical entry model is there. Fundamentals align. GBP is bullish. Dumb money index is all bearish, right? Everything's in line for me, at least. You can read a lot more into the fundamentals, but again, it gives you a whole AI summary, so you don't have to do all of that. And bullish, right? Where we have a bullish bias. We have an imbalance right here that price obviously internally respected just a little bit, but around here was all I needed personally to pass my accounts. I was risking 1.5% on these trades. So again, this closed around 5%, little over 5%, I believe, actually, for total P&L. And I closed some accounts up here, closed some accounts here, closed some accounts here, and pass those accounts. I'll show you guys proof right now. This is on Alpha Capital. Each of these are $100,000 accounts. Pass these on that same day, which is April 23rd. I lied. April 22nd. This is the verification after KYC and everything went through. But this is phase 1. I passed 2 phase 2s on this and got 2 verification. I now have $200,000 live funded, and then I also passed another phase 1 on another $100,000 account. You can see the date right there, April 22nd. And these 2 right here are March 10th, right? These 2 phase 1s are these 2 accounts right here. I just passed them again a month later on phase 2. So yeah, again, April 22nd right here, April 22nd. This was the trade that passed it for me. Again, I had to make sure everything was in line, made sure those technicals were in line. This is my entry model again. I showed you guys demand zone followed by lots of liquidity, trending market, and on the 30-minute time frame, not the 5, the 30-minute time frame, higher time frames, fundamentals a lot of times are driving price. Make sure your fundamentals are in line, because if you're not, you're cooked. Okay, so make sure your fundamentals are in line. And yeah, that's it. Normally for the 30-minute time frame, I target the next high, and that would have still played out as well. If you're risking 1.5% here, gosh, it would have been like a 7% trade. 7%, yeah, it would have been like almost 7% trade, something like that. Hitting a 1 to 5, risking 1.5%. So, yeah, that played out as well. Again, I only needed a target right here to pass those accounts. But that is pretty much it for the weekly recap, because this week was really dry, as in presenting opportunities. A lot of times we'll get opportunities that present themselves. Either it's on the 30-minute or 5-minute where setups pop up like this, and I see it. Looks like a great trade, right? And I'll come over here, right, and realize, fundamentally we're bearish. This is, going to be a losing trade. A lot of people won't use the fundamentals on the 30-minute time frame, for example. See this, see the entry model, and see it as a good trade, right? Because they're just seeing the technical side of it. And a lot of times we, right, like me in my Discord, would just sit there and watch it, and it'll lose, right? It'll just lose. And it's pretty cool watching those play out, right? Using your outside tools and stuff like that. But we didn't actually get that this week. We didn't get that at all. So there really wasn't just that much setups at all in the market. There was beautiful NQ position that I unfortunately missed, and that was it. And again, on the 5-minute time frame, I used a lot more technicals, right? You're not going to be using fundamentals on the 5-minute time frame mostly, right? Maybe to get an overall bias in the market, but you're not going to be realistically using fundamentals in the 5-minute time frame. 5-minute time frame is pretty much all technicals, and that's where I strive at personally. And again, usually you get 5-minute setups where everyone sees the entry model come up, and I can sit there and use my actual technicals and understanding of the market and understand how price algorithmically targets certain levels within the market that not a lot of people really understand or care to learn. And they think, it's just too hard to learn, I'm just going to stick to the entry model. Or if you're just sticking to the entry model, you're not getting market context on why that trade should actually win. You're just throwing up the entry model and hoping it sticks. So you're kind of just asking for failure there. But yeah, that's kind of what we do. And normally I get a bunch of setups that pop up. Just got a trading view alert going off right now. Yeah, market's about to close. So, yeah, normally we get a bunch of setups that pop up and we can watch. But unfortunately, we did not get any of that. So that was it this week, boys. That was it this week. And again, just to show you guys another profitable week. Go to my accounts. December of 2025. This was again. This was this week. This was last week. Just one trade, that was it, and then we had dry period, and then March we absolutely cooked as well. So again, bit of a dry period because of the whole Iran war, but with the concepts that I use, not the entry model, the concepts that I use to give me market context, I skip a lot of these losses that are just unnecessary because I'm putting context behind the trade. Again, on the higher time frames, you can use just fundamentals and literally just look at why price would be bullish or why price would be bearish. It saves you so much losses. But yeah, that's pretty much it, guys. If you have any questions, let me know. If you are curious to learn the concepts that I use that actually, found me consistency, because, I was not always trading like this at all by any means. But if you do want to learn the concepts that, got me 200K funded, and we're going to continue pushing, a lot of people are learning a bunch of stuff. I will put a link under this in my YouTube video, but again, or don't join. I don't really care. I'm just teaching you guys what found me consistency and how to properly actually use this stuff, because again, I've been trading for 3 years, and before that I couldn't find any consistency at all. Yeah, that's pretty much it for this one. If you guys have any questions about the entry model or anything like that, I have a lot of free content on my YouTube as well, or just you can DM me on Instagram, or leave a comment. I'll get back to you. And yeah, that's pretty much it for this one, boys. So I will catch you guys on the next one. Peace.